Well, after weeks of heightened trade tension between the United States and China, which triggered massive market volatility, President Trump this week expressed confidence that the two sides can reach a deal. Here to unpack all the goings-on and what it could mean for the markets is Matt Gertken. He's Vice President and geopolitical strategist at BCA Research. He joins us from Montreal. Matt, I want to start with maybe you could just sort out the confusion. I feel like every time we look, someone's upping a tariff or delaying a tariff. Give us a bit of a play-by-play in the past couple of weeks and the net of all that, please.
Yeah, well, the basic detail is that Trump is now threatening to raise the 25% tariff to 30% on half of Chinese imports in the U.S. And then he'll have a 15% tariff as of December 15th on the remainder of Chinese imports. So all U.S. imports from China would have a tariff on them, and at the highest level, that would be 30%.
So where does that put the state of the negotiations? Again, I mean, I think journalists were having fun parsing the fact that perhaps he'd been called by someone in China to bring back the negotiations. Others would say they were already in place. But what do you think really the net effect right now is where they are on negotiations?
Well, basically, Trump is wavering. He has piled on the pressure really aggressively on China, especially over the past month. He's frustrated that the summit in Osaka, Japan at the G20 was a flop. China did not really deliver on the things that were allegedly promised. In fact, there was never even a joint statement. And then he added on the pressure, but still really isn't getting major concessions from China because China's not in any hurry. China's got a longer time frame than President Trump does, having an election just around the corner in the U.S. And the other element is that the Federal Reserve, President Trump, is just hugely frustrated because he believes the central bank should be backing him in the trade confrontation. And so he has responded to any kind of signs that the Fed won't cut rates, what he sees as fast enough. He's responded to that by escalating the trade war to cause trade outlook to darken and reverberate back and encourage the rate cuts.
And let me ask you, I mean, how does that impact trade negotiations? I mean, for both sides. I understand that China has, or at least the president has a longer timeline than the U.S. president, but they're both going to face a global downturn because of what is going on. So how does that motivate both sides to get something done?
Well, I think you're making an excellent point there because President Xi Jinping is not Chairman Mao. He cannot really impose austerity on the Chinese people. If he does that, politically, he may have the raw power to do that. But China is a much different country than it was in the 1950s and 60s and 70s. And if a leader, an individualistic leader, just makes decisions that crush the manufacturing sector, cause large-scale unemployment, and darken China's future, through denying, worse relations with the West, less access to technology, less productivity. Those things will basically greatly reduce China's economic prospects, and then the Communist Party's political prospects in the long term. And Xi Jinping, since he's around forever, since he's gotten rid of term limits, he actually will have to deal with those consequences if he's not pragmatic. So there are constraints on China. They just don't require China to go crawling to President Trump before November 2020. It would be Trump who the markets in the U.S., if they sell off aggressively, if we're looking at a bear market, if we're looking at a recession in the U.S., then President Trump would be the one who would try to turn that around and accept the concessions that China has offered thus far.
I want to dig into something I see that you published in a piece of research. I thought it was interesting. You talk about how Trump is on the verge of a tactical trade retreat due to fears of economic slowdown and a loss in 2020. What does a tactical trade retreat mean?
Well, what it means is that with the global manufacturing slowdown occurring and potentially starting to cause businesses to stop hiring or even lay off workers, you can have an impact on consumer confidence and on business confidence that then begins to trickle through the rest of the economy. Because thus far, the services sector, consumers have held up pretty well, and that's prevented us from going into a full-fledged recession. As Trump is looking at that start to occur, he basically has to think about whether de-escalating the trade war will improve and extend the business cycle and therefore increase the chances of him getting elected. I mean, he's inherently a commercial president. His re-election bid is going to depend greatly on his economic record. He's on a very shaky footing if unemployment is rising, and if the term recession itself is being bandied around. And we've seen that over the past few weeks. Just the concern about recession is likely hurting President Trump in terms of some polls showing some increasing doubts on the U.S. side about whether the economy is improving.
So, I mean, is there anything really, I mean, because the one thing I find interesting about all this is that, you know, I don't want to be overly pessimistic, but if, you know, businesses are notoriously conservative, and if you're trying to make choices in investments, and we're seeing Apple start to move operations already, has the damage been done? I mean, could anything even happen at this point that's going to turn things around? Because that seed has been sowed in terms of, you know, there's going to be issues, and people might just say, you know what, to avoid things in the future, I'm just going to move things around.
Yeah, for investors and for business leaders who are concerned about the long term, about fixed assets, about capital spending, those decisions are hard to change, and then once they do change, they're hard to change back. And the fact is that over the long run, the U.S. and China are going to continue to fight. They're having a struggle, a great power struggle. And it's one that is bursting out on the trade front, because that's where the outstanding imbalances are. But it will really continue, and it will involve persistent tariffs and sanctions. We may get to a point where even popular embargoes and boycotts are taking effect. So there's a long-term, very cloudy picture and black clouds, really, for investors and business leaders, and they'll be moving the supply chain to Southeast Asia and elsewhere over time. When we talk about a trade deal, at this point, it really is whether President Trump and Xi Jinping can call a truce or a ceasefire, just to give them both some time, to give Trump a little bit of a boost ahead of the election, and to give Xi Jinping a little bit more time to prepare for this long-haul conflict with the United States.
Well, it certainly is complicated. I've only got 10 seconds, Matt. I just want to make sure I don't go over here. But Brexit, I mean, how disruptive is that going to be in 10 seconds or less?
Basically, Boris Johnson's move today raises the probability of a no-deal exit, but it's still probably only a 1/3 odds that occurs, because in general it would cause a recession, and no one in the UK really wants to self-inflict a recession.
We will leave it there. Matt, always a pleasure. Thanks for joining us.
Yeah, thanks a lot.
That was Matt Gertken. He's Chief Geopolitical Strategist at BCA Research. Thank you for joining us tonight. I'm Kim Parlee. We hope to see you again next week. Take care.